I wanted to rechart TRVL afresh on the gate chart, because in the past I've done it on Nex, and I wanted to just do it on gate afresh and just remove all my drawings. And sometimes it's good to do that, just to clean the chart up. So there you go. No more drawings. Get rid of the volume indicator for now. And just look at this with fresh eyes. Nothing. And try and like evaluate it without a bias, without all your previous technical analysis. What I usually do is I'll go to the yearly time frame and have a look, mark out key levels. Now I know for a fact that the all-time high on the on TRVL, as reported by CoinGecko, it's a bit lower. So let me see what it is on CoinGecko, and then I'm going to add that. What is the report here? Let me see it. Yeah, see. November the 28th, it's reporting it as. So that's the all-time high, November 28th. CoinGecko is saying that it's this is what CoinGecko is reporting as 1.56. So this initial push isn't classed. That first candle doesn't count. That's basically what is being reported on CoinGecko. If you see that, it makes sense. So it's saying the first candle is ignored and the actual all-time high is 1.56, so that would be your point of reference. Let me just mark that out as I do. All-time high. And then let's see what the all-time low is reporting as. So that's 0.0197. And we have that already here. This is slightly under, but I don't think it matters. And then we can also mark that as all-time low. Okay, so that's that. So we have our 2 points of reference now, which is great. Now when it comes to these like coins and tokens which are launched, I always like to make the launch price as a point of reference too. So let me do that now. And that was, according to this on Gate, it says 9 cents. And then we mark that out too. I call it the Gate launch price. And see how that launch price has been behaving, how the price has been behaving around the launch price. It gives us an indication of the future to see how the price behaved around these key levels in the past. So it's not a bad idea to do that for anyone who is interested in technical analysis to do that. So we have our key reference points. Now we have our all-time high, all-time low, the gate launch price, and then what you can do is you can imagine, what I would do is I would imagine that this, based looking at this now, I'd imagine that this top half is one range, and then this lower half is another range. That's how I would picture this, right? And then also at the same time, I can just visually looking at this, I can clearly see that the lower half has, even though there's one range, it also has two ranges. There's two ranges in the lower range, and so we are actually in the lower half of the lower range at the moment. That's where we are, and you can even break it down even more if you want to, and you can see that there's another range here, and we just on the see, that's the lowest range, and then we're in the next range. We're just on top of the next range, which is the middle range of the lower range. That's kind of how it looks like the price has been behaving when you break it into horizontal ranges. And you can almost say the same thing about the top as well. Not so clear, but there is like there are some kind of potential levels. I'm just kind of making this up just visually, and you can see that it looks as though there are some higher ranges too. So everything is in a range, and everything is within certain levels, and nothing is always the same when it comes to different technical analysis. It's always the same when you look at different charts. It's always the same. Now usually what I would do is I would do a volume pool on the whole price. So you use this tool called the fixed range volume profile. You take it from I'm looking at the 3-day chart. I'll go to the daily chart to get more accurate information. You would take it from the first day all the way to the current day. I need to cover this. Yeah, colors. Right. So on the whole of the range, taking into account all of the volume from the day one of the launch through until current price, this chart is telling me that the point of control, which is this red line, is where most of the volume has been, is at this price, at this lower price. So I usually, what I would do is I'd mark that, and I would label it POC, point of control, make sure it's aligned. The reason why I do that is because if it moves, I know. Yeah. And then I usually also do it for the low. So right now the low is there. It's at the all-time low. It's called the value area low. I don't need to do it because the all-time low is on the same line, so I know already. And according to gate, the value area high is much higher. There. That is the value area high. And effectively what that means is that 70% of the volume is within this range, or between the value area high and the value area low, within these two blue lines. That's where 70% of the range is. And sometimes you can reduce that if you want to be more conservative in finding ranges to 68. And as you can see, there's no difference. So I've just changed it to 60. If you were to be like, if you want to see where 50% of the volume is, then you can change it to 50. Yeah, and you see 50%, it will tell you that most of the volume is in the lower half. Yeah, that's where 50% of the volume is. It's in the lower half. You can really tighten that if you want. It doesn't really help, but if you want to, you can. Yeah, that's where 30, the most of the volume is in the lower half. See the 30. But for all intents purposes, I just leave it on the default, which is 70, and obviously you can increase the row size to get 148 is the one I use. You can add that to, you can increase that to whatever you want. It doesn't make any difference here. Oh, it does. See that? It reduced the row size. You could probably break it down to more if you really want. It doesn't really make much difference to the value area. It just shows you there. It's actually the point of control is a bit higher there. See that? Maybe it helps you to find the lines better and tell us the value area high is there. Maybe for an illiquid token like this, it is actually better to use a larger row size. It gives us more accurate data, because now you can clearly see where. Let me see if I can increase that even more. I've never done this before. No. It just vanished. Oh my god, I just lost it. So that didn't work. Let's try 2000. I don't actually mind that, because look, I'm getting really nice profile, volume profile data. So actually I don't mind that I've changed it a little bit. Maybe for this it's better. And actually what it's telling me is that the point of control is now, we're at the point of control at the moment. It's giving us more accurate information. So maybe for this kind of illiquid situation, it is better to use a higher row size. So I've got that now. Let me just chuck that all into. Get rid of all of that. Now we'll go back to the 12-month time frame. Now you see here you have a very important level. It's called the yearly level. I'm going to mark it out. Called it yearly. You have one on the bottom here as well, and mark those two levels out. And then at every time frame you have these levels. So here you have a 6-month level. Not as strong as the yearly level, because usually it's where the price reverses, and here it's kind of within the range. So I wouldn't necessarily consider that. But it does look, it does appear to be a significant level on the 3-month time frame. And then on the 3-month time frame you have, they see here there's a 3-month level as well. Let me change these colors a little bit so they're clearer to see. We've got a 3 month here. Now what you can see here is this 3 month level has been washed. This candle going through the level and coming this wick means this level is no longer a 3 month through level. It's weak. It doesn't happen on the 6 or the 12 month, but it does happen on the 3 month. So that is actually quite an interesting observation, because it's already been cleared once. So even though there's a yearly level there, and it may act as support, it doesn't necessarily mean it's going to be a stronger resistance. And then you have these monthly levels as well. Maybe I'll get rid of that because of that. I don't know. Let's just see. Let's just keep it. Let's change it to green so I can see it. Same thing happened here. Weekly level here. See where the price goes up and it turns with a green candle and the red candle, and it forms a square. And does the same thing here. Does the same thing here. Does the same thing here. Does the same thing here, but you see how this level has been hit through like 4 times. So the more times that a level gets hit, the weaker and weaker it becomes until it eventually just gives way. So part of the reason why we're kind of struggling right now, it looks as though, is because there is a level there. There is a significant level, and effectively what you would end up potentially doing is you would flip that into support. I'll leave it now, but it is a wash level. And then you obviously, and again, this weekly level here, technically it's washed, even though it's probably quite strong, because you have a reversal formation with a doji and a red and a 2 green, a doji, an morning star doji, and then a 2 reds, a morning star doji, and then 2 green. That's quite a powerful reversal pattern on the weekly time frame. It's a very strong pattern. That's very nice to see. And then what you can see is that the price is consolidating after that pattern. So the pattern looks as though it's holding on the weekly time frame. You have all of these levels, and obviously you have the lowest level down here. So the untapped weekly level is the strongest. So the lowest and strongest level right now is down here at 2 cents. And obviously you could use every time frame, put daily levels too, do exactly the same thing. Have a look at my phone. I'm trying to get into a trade, and Missed the entry. Okay, that's fine. There's a ton. I mean, there's a ton of daily levels which have been tapped. Every one of these squared bottoms, they've been tapped. So they've been washed. The wick has come through and the price has gone up. So even this one has been washed here. The wick has come down and the price has gone up. So the nearest daily level which has not been washed is down here. It's a daily level. And then you have lower levels which are unwashed as well. The lowest is this daily level down here at 1.9 cents, 1.98 cents. So looking at these lines, this is where your liquidity is. And obviously the higher time frame, the more powerful the level. And so the most powerful level is down here, because not only do you have a yearly level, you have all of these weeklies, these dailies, these untapped 3 monthly, weekly. You have a lot of levels of untapped levels down here which have been formed just by the way the candles have formed, just by creating square bottoms which haven't been traded through, or where the price hasn't come back to reach that level again. And it creates these levels on all the different time frames. And so as you can see now, there's that's where there's a lot of strength in terms of liquidity at these lower levels. And the more, and the reason why we have this kind of behavior is simply because of the way the price has moved. The price has created these levels. The formation of the candles, the inability for the price to come back. You see what's happened here is the price has gone up. Usually what would have happened is the price would have gone down to clear these levels. But for some reason, it hasn't been able to do that because there wasn't enough selling pressure. There was more demand than sellers. And on the way back up in the reversal, in this reversal, it's created more levels. Yeah. So not only has this reversal created levels which haven't been traded through, this reversal has created levels which haven't been traded through. These are two significant areas of interest. And then obviously all of these levels which we've created in this current range have been traded through. You can see how the price wicks down through a level and it comes back up, wicks down, like look, this daily level here. See how the price wicks down and comes back up, and it's done the same thing with this level here. It's done the same thing with this level here. It's done the same thing with any one of these daily levels. This level here. It's done the same thing with this level here, and the lowest in this range is here, and it's done the same thing here. The price is wicked through and traded up, and here the price didn't wick up, or it just went through it, but as it came back up, it came to back test it. You see, so this is an old level which has been tested 4 times after it's been traded through. So it looks to be quite important, this level here, this one. So all of these are basically traded through, except this one where it was traded through and traded back up just to come back and test 1, 2, on 4 daily occasions. So I would maybe look at that level and say, well, that's quite a significant level. And this weekly level is, even though it's been traded through numerous times, it's you can clearly see that there is some a reaction to it. You can clearly see that. So it looks as though we're range bound between this lower daily level at 2.9 cents and this higher weekly level at 3.2 cents. So it's kind of looks like where we are right now. We're stuck between these two levels. So I leave these are the two levels that have been traded through, and every other level hasn't been traded through. So these are fresh liquidity levels. And naturally, you would expect if the price goes up that these levels would offer some sort of resistance all the way up to the all-time high, which I've hidden, but it is there. Let me just create this, create a group of drawings, a high time frame, and levels. All right, so that's my levels. Done that. So I've got my I've got two levels. I've got to get rid of one. This one's more volume. We'll call it volume. It's your high time levels. Yeah. Okay. So let me put the higher time back. But let me just hide the fixed range. Use a Fibonacci tool from this all-time high to this all-time low, roughly. Let's see where it lands. See if I like it. Sometimes you can take it to the first price up there. I do like how that lands here. The 5 sounds there. This 382 lands here. 286 lands there. You know, sometimes taking fibs, not from the all-time high, but from the within the chart itself, gives you better results. Every chart has its own kind of nuance. Let me make this exactly accurate. Even though the all-time high is actually lower, I do like this from all the way to the top. I do like how the golden pocket, which is this 618 region, lands here with this high here. It's like the price has gone up and it's kind of confirmed it as resistance. And I do like how this 382, the price came back up to the 382 and offered resistance there. And then the 286, it kind of did the same thing. You see this whole range, 286 is offering resistance, here it offers support, and then here it offers resistance. It's interesting how on this chart, taking it all the way to the top, that $3.18 seems to form better fib. Fib lines. If I take it to the all-time high, as reported on CoinGecko, I mean, it's not, the resistance is this range here. This could work too, that's the problem. 382, but I think the other one is more gate. It looks like the other one seems better. Leave that here for now. Yeah. I'll hide that. Don't know why, but for some reason this high is good. Look at that. This. I might have to do it on every chart because every chart has a different high, huh? And see if there's any kind of pattern. But look at this, it's the all-time high. So this is from this gate height to the all-time low. And look at this blue line, it's just, it looks like it's offering resistance until it offers support, until it breaks, and then it kind of offers support. You have the same thing here, like on this 4-1 comes up, breaks, and now it offers support. But then sometimes it doesn't, it just if I was to take it to the all-time high, which is this top of this candle, what does that tell me? Does this go here? Yeah, that one is perfect. Look at that. That one is really nice. That 2-1. That 2-1 bounce, bounce, break, and then look, it offers support, back tested. This is really nice. And then here, I don't know what to say. It does finally offer support. It kind of teeters. So it's interesting because on the Gann chart, this Gann chart is behaving better on this on the actual all-time high, but on the fib chart, the gate all-time high is behaving better. So maybe I prefer the GAN in hindsight. Maybe I prefer the GAN. I prefer the actual all-time high. Maybe that's more relevant. Yeah, let's just go with that. And it does actually fit, because you see how this back test to 618, the 5 is not even a fib level, so I would ignore the 5. It's just there for reference because it's halfway. And then you obviously have this 318. It kind of does, if you look at the way the candles are formed, it obviously overshoots, but it comes into it, resistance, it closes above it, it holds it as support for 2 candles. As it comes underneath for 1 candle, it comes back to test it for 1 candle before the price actually reverses. So actually you could argue that 318 is correct, and here it does look correct here, and this back test is correct, and that is almost correct. It's kind of faked, but it's almost correct. So maybe actually this fib is correct, and then the 236, well, yeah. Who knows? Right, so I do like that actually. I do like this GAN. I think we will get a reaction when we come up to this 3-1. Is anyone saying anything on chat? I haven't paid attention, so no. What you can clearly see with these GAN lines, I'm trying to not be biased here. Yeah, that's why I've just started charting from afresh. But what you see is that these GAN lines hold as resistance until they don't, you know, as the price falls. It's like in free fall. This is all free fall. Resistance, 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 and then suddenly it flips to support. And then it works its way up to the next one. Resistance. 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 Now it's kind of... Is it support? It looks like it. You see this kind of like candle here? That is support. You see, that's a support candle. Does it need more support? I don't know. It's hard to know. Because, I mean, according to the GAN lines, it could, you know, you could go down, you know, it is, but like it has here. But, I mean, the context obviously is really important. Like here we're in the peak of the heaviest, this whole move down here. This whole move down here from September through to December. I mean, this is like the worst news ever. FTX collapsing, Luna collapsing, just whatever, everything going under. It was like the peak of the bear market. And this first move up all the way through to almost the end of February was the first impulsive rally of the bull market. If you imagine that the bull market started last year, it's just the problem has been that since almost the end of February, the price has been literally going down, where a lot of other tokens and stuff have been going up. And Large portion of that has got to do with Bitcoin. Bitcoin's been going up and Bitcoin pushes everything else up. So there's obviously been a little bit of a disconnect between this part of the chart and the rest of the crypto market. If I was to compare this with the rest of the market, there's divergence. This is going down and the rest of the markets are going up. So that's something interesting, and I don't know if the reason why this has happened is because of the momentum, because this is a really crazy down move. That's a really strong down move. There's a lot of strength in this downward trend, and it takes time to correct that, you know, it does. So I'm not sure why. I mean, could this have just kind of gone up and just did this and followed the rest of the market, and we'd be here right now instead of down here? I mean, some altcoins have done this, but I don't know if they've had such a big downward move. You know, like there was no upward momentum. It was, if you look at when this token was launched, it says here the 24th of November. I think it's the 21st of November. That was literally the end, the peak of the end of the Bitcoin bull market. It was launched at the peak of the Bitcoin bull market, the worst possible time. Who knows? Yeah, so I don't really know. I don't really have an answer. So this is quite interesting, this GAN. There's obviously there's clearly no Elliott waves here. I can't see them. Like, you could almost argue, is there 5 waves down? I don't really see it, because let's just say hypothetically there were. Where would the 1 be? Say here, 0 to 1. Was that the 2? What was the 3? That can't be a 4 because it's above the 1, so it doesn't work. So where is it? You know, there's no like 5 waves down. I think we've just, there's no waves here. There's just, this is just a correction, or it's just basically a sell-off. Are there any channels? And then what about pitchforks? These are good questions. And then obviously we have the GAN fan. It's trend-based fib time. Let me have a look at that. You see that? To there. To there. Wrong one. For me, this was the most interesting tool, actually, because I did a trend-based fib time from the first week to this this first significant low to the first significant rally high, and the 618 came out on this all-time low here. See that? You can only do this on you can only really make this work on the weekly time frame, because the window of correction is the weekly time frame. And according to this, there's a fib time coming on the 18th of March. So it'd be interesting to see how the price reacts in that week. And it'd be interesting to see where the price is. Is the price going to be here? Or is the price going to be somewhere lower or higher? You know, like, we just don't know. But we know that it's coming, and it's on the 18th. It's the week of the 18th of March. And based on this, you would expect something. And then the next one, the next significant one, is going to be on the 18th, the week of the 18th of November 24, and then you have the 21st of April 25, and then the last one according to this is in December 25. Okay, obviously these continue, but I think in the context of Bitcoin and the bull market, we have some significant ones coming. And this April the 25th, I'm interested in that one, because if that could land us with the end of wave 3, if this does a wave 3, you know, like, I mean, I'm just trying to be unbiased. I'm trying to not be biased here, trying to look at this, but I think anyone looking at this would go, wow, that's actually quite interesting. You know, that's very interesting. I do like that. And then obviously if you do some fib extensions, there's different ways you can do this. If I take it from this low to this high to this low, so a 1-to-1 of this move is there, and back up 14, 13, whatever the high is. This is 13.62. That's the 1-to-1. The 168 is up here, and the 2 is up there. The 2.618 is up there, and vice, and continue. Just continue. You can potentially continue. So I will have more marked out. If I was to add them, there's the 2, and then 618. Put these 2 in as well. Excuse me. Put the 3 in there as well. Just based on this first part. But what I would rather do, rather than do it on this one, I'd rather do it on the wave 1 down to the wave 2. I'd rather do a fib extension on the first wave than on this. I don't know if I like that so much. It does give me an idea of the 1-to-1 or the 1.168, but personally I prefer to do this, like an inverse correction, sorry, a fib extension, a full fib extension. I prefer that. And according to this, this is your first, like, apart from this high, which would be a 1-to-1, then you could look at those targets potentially in this corrective move. I mean, sorry, in this impulsive move. It's interesting how though this 2162618 literally takes us back to this gate high. Don't know if you noticed that, but look at that. Look at that, it's like perfect. That's really interesting. I didn't even notice that, but look at that. For some reason, even though this gate high isn't the all-time high, for some reason it still matters, because on the fib extension from this low to this first rally high to this all-time low, the 2.618, it lines up perfectly with that high. So for some reason this is a level to be considered, and it is possible that even though the all-time high as reported by CoinGecko, I mean, that it's suggesting that it's 1.6. I understand why they're saying 1.68, right? 1.68, 1.59, sorry, 1.59. They're saying 1.59 simply because of this. They're ignoring this first candle, and they're basically saying it's the first high after this candle, which is 1.56, whatever it is here. That, and I know that makes sense. Let me look at the volume here. But you had a lot of volume on that first candle. It's like 8.962 million. And the volume went all the way up there. I mean, without going back in time, let me go back in time and have a look. I think that's the only thing you can really do, is just try and go back in time and see what it was like. It's going to take too long. Let me go to the 4-hour chart. And so it was within the first 4 hours. It's that dinosaur. This is the very beginning. Can we go in the beginning like this? Can we just go to the beginning? Let's read this. There is this. Oh. Oh, if you do that, it does monthly. Okay, no, that doesn't work. Look at the volume here. There's a lot of volume here on gates during this period. See that? That's 150 million candle, and this red one is a 242 million. There's only 292 million tokens in circulation. Yeah, we had a lot of volume from the 1st of April through to the 31st of May. There's a lot of volume, and there's some buy volume. That's 150 million buy volume, plus another 60, plus another 46. And then as soon as it got up to there was a crazy selling, like crazy. It came back all the way back down. It went all the way up to 51 cents. And it, on that same 3-day period, let me just have a look at this quickly, because I think this is quite interesting. So within one day, that whole, these two green candles, high volume, and then in that one day, we had 145 million tokens were sold on that one day. It went up to 50 cents, and then by the end of the day, it was back down to 21 cents. It lost over half of its value in all of that selling. That's a very, very bearish reversal right there, because you have this high here and you have good volume going up and then more volume coming back down, closing underneath, and you see what happens. That level was never breached. So I think this level, which was never breached, I mean, I think actually in terms of my ideas of what needs to happen, is we need a close above this candle. think once you reverse the volume above this candle, you are basically, there's no more volume. You've reversed all of the volume. In terms of price, I think that candle is quite important. And I think initially what you want to do potentially is get into that candle. You want the price to get into that candle, and to get into that candle you're basically coming in, this is the candle of interest, this high volume candle, and that's your, once you get into that range and you basically are in that range now. We never were able to get there here. Yeah. The top of this candle may offer resistance, you know, because it kind of lines up with this candle here. See that? You see how this candle here kind of ties up to this candle here. If I pull this line back, look at that. Look how they perfectly line up. So I think that's quite an important level right there at 52 cents. I can mark that out as an SR flip. I think getting back into this high volume candle is quite important too. I think once we basically the body, I mean getting back into the body would be really important, because we couldn't get back into it with these candles. It closed lower than this, but I mean to get back into the body you first have to get back into the wick. So in my mind, getting back into the wick is the first maneuver. Does it line up with anything? Not really. Yeah. You definitely have an SR flip up there at 52 cents. Let me get rid of that fib extension. I like that. I like that retracement. Let me bring the higher. Does that line up with anything? See, like that blue line I have lines up with this weekly level. So yeah, obviously there's going to be a little bit of resistance there. And then this blue line at the top, this SR flip, no, nothing. Right time moment, nothing. If I was to put everything up, does that SR flip? No. That's an arbitrary level. It doesn't mean anything. Once you get over it, it should be fine. But look at this blue level here that I have. You have gone to gate, you have a value area high, you have the 50% and a weekly level. So you have a lot of things going on here. Right. I don't know if I would mind if we could go all the way up to the 618 with one impulsive move, get up to 30 29 cents in one impulsive move. I think that would be a real sign of strength to get up to there. Get up into that golden pocket. And on this trend based fib extension, that would also take us into this 141. It would just take us into this 1414, 1414. It would take us above the value area high, so it would look really bullish, but it would correspond perfectly with this yearly level that I have marked as well, which is the 618. See that? This green level here, there's like a it would have to be quite bullish, but I think that would be my bullish target. I think that's what I want to get to. That's my target here. I'm thinking out loud. I think I would like to see that. Just push right up, get up to that level. Let's get up to the 618, because I think ultimately what I'm thinking is, sure, you've got all of these levels on the way. I'm not saying we're going to go up in a straight line, or that's the price doesn't move like that, right? All of these are levels, right? I've marked them out. So obviously the price is going to move between levels, you know, like in zigzag shape form, however it gets up there. I'm not trying to predict how the price moves, but I think it would be amazing to see an impulsive wave pushing up all the way into this key area here. That would be really amazing to see. From the point of control, get above the value area high, all the way to the 618. I mean, it's not inconceivable because it's only a 8x. It's only an 8x. Six 10829. And that's going to be the first major area of resistance. Is going to be this. We go to the higher time frame. The price gets up to this yearly level area, which is also the 618. The top of this candle. I think there's going to be resistance there for sure. I mean, there is resistance along the way, and that's the other thing to bear in mind. You obviously have this 382 area, and that's coming in at about 9 cents. Then obviously you have this 50% area. You've got levels to cross on the way. Yeah. I mean, I think if you were to, like, if I was to draw this out the way I'm imagining it now and seeing how this would behave, let me just get rid of all of these and just have us see this one here. So this is the 618 retrace from the all-time high, not the gate one, which is higher. That would be amazing, but I don't really foresee that, because the problem you have are multiple exchange saying different things. You can't just take the gate one, because like on Bybit it goes up to $4.50, and on Mexi it says like 1.56. So because, you know, people aren't all trading on the same exchange, they're trading on different exchanges, they're going to be charting differently. So I think you have to, the most conservative one will be the correct one, which is the from the actual printed or reported all-time high to the all-time low. And obviously you have this green candle, which is a high volume candle. Go up there, come back down. Yeah, if we were to go up there in an impulsive move, like a 5-wave, wave one. The great thing about this chart right now is that we haven't actually had any impulsive move. None of this is impulsive. Arguably, you could say that's impulsive, but I don't really see it as impulsive, because I can't really see increasing volume. I mean, you could arguably say the whole thing is increasing, and it is, like, but really it isn't. It's not significant. It's not like crazy volume. It is slightly increasing. If you look at the average here, it does go up, but it's not crazy. And this move up isn't like these candles, green candles. I mean, it is quite impulsive, huh? Was that the wave one? I mean, when I say wave one, I'm contemplating wave one of one. If that was the wave one from the all-time low. So this is the A, B, C. It's more of a flat correction. So this next one is going to be a wave 3. This whole thing is a wave 1. Huh? That's the wave 1 of 1. If this was a wave 1, so I don't know if it is, but let's just say if it was, then you could quickly figure out your targets like this. Just do a trend-based fib extension. Do we get up there? Put 4 in there as well. 4.5618. Probably not. Probably to the 3. Or 2. There's no natural resistance there. Let's see. Get rid of this. Put these levels back in again. Where's these ones? That's fine. So this is key, huh? Pretty strong level here. It's quite hard to get up there in one go. That's the problem, because you have so many intermediary strong levels, you'd really need an increase in volume to push through, which we're not seeing right now. So the only way to get through levels without seeing an increase in volume is exactly the way we're forming price action right now. Right? Let me explain. So there's many ways of getting through levels, right? One way is just an increase in volume. So this volume would be really, it'll be up there, and it would just be pushing through these levels. It would just be quite bullish in that sense, right? And when you don't see that happening, then the only other way to get through levels is consolidation underneath resistance. So you find your resistance areas wherever they are. It could be anywhere, and then the price will move up to a resistance, and it will just consolidate until it moves up again, finds the next resistance, and then it just does the same thing. So you're not getting an increase in volume in the sense that there isn't that injection of volume, but you have a consistent volume which keeps on pushing the price up. So instead of the increase in volume, it's the increase in time which is pushing the price up. It's the volume over time, right? And in terms of like market structure, when you create patterns like this, it's actually much more bullish on the longer time horizon, because it then becomes very difficult for the price when it does move up to the next level and do that. If it comes back down, this kind of behavior creates support. The price finds support above previous consolidation areas if it was to move up again. Yeah. So actually it's a lot healthier for price to behave that way. And the problem is that you're not looking at crazy impulsive moves. You're looking at step up moves, going level to level, stepping up. I think for the sake of the bull market, though, we're expecting something more impulsive. That's what we want to see. We want to see an injection of volume. Like when I look at the volume profile now compared to when we experienced it back in April 22 on Gate, it's very clear that we're not really experiencing similar levels of volume. I think we want to start seeing this kind of volume, don't we? We want to see this. I think this is going to be healthy too. Like, I don't just want to see, I mean, I don't mind, but this kind of price action is going to require a lot of time. Yeah. And we don't have that much time in the bull market. We only have 1 year and 8 or 9 months to go from now. I'm expecting the bull market to end in September 25. So I would expect some kind of impulsive move. And the impulsive move needs volume. It needs volume to become impulsive. So I think we're going to really find it difficult to get through certain levels without the volume required. We have to see how this kind of behaves. And I think what we would look, I don't know, it's hard to tell. And when you're putting the GAN in as well, I think this is quite an indication. Like, and again, it depends on if and when it moves. And then you chuck in the fib time that I had. And this is, I mean, this is the problem. You don't want to get to this point at that time. That's not going to look great. Getting a 2-to-1 extension on this retracement exactly when the GAN crosses a major fib time like that, that's a problem. That's a really problematic. You want the reverse. If anything, you want some kind of impulsive move up to come down to go up. You know what I mean? That's what you want. You want to see the opposite, or even better. I mean, if you do come across, you almost want to get up to here. At that time. But I mean, the interesting thing about this fib times, it corresponds perfectly with when we know that Sensei is launching. Look, 24th of March is basically that period. That's quite interesting, you know. Could we get a Sensei launch to coincide with something else? Could it be more than just Sensei? I don't know. It's quite interesting, these fib times, and how they've aligned. And then the other thing is, we don't really know if the price is going to go up right now because we don't have the volume. We definitely don't have the injection of volume. So are we going to see this to just go sideways until the 24th of March and then some kind of impulsive move? Yeah, this is very difficult to predict. The scan is quite nice. The other thing I had drawn out on Nex was this channel idea that I had. Let me see if it works here. Maybe. Hold on. Let me have a look at that. Doesn't work really. Let's try this. Let's try it to that high. That's better. Let's try the 3-day channel. See if that works. Oh look, that's better. Look at that. Look at this. Look at this. Look at that. See that? So that was from the gate price launch up to the all-time high. This lines up perfectly. That's a clone channel, same channel. Look at that. That's nice. Clone it again. Look at this here. Look at that. This ignored, this ignored. So if we kind of, I don't know what we are now, but for some reason, the price flowed very well on the 3-day chart. Bounce through, right, resistance, lost into the low here. This is the best one, but then it just ignored it. Tried to get back to it, it couldn't. And then here it tried to get back to it, couldn't. So really this should have gone a little bit higher. Do like it though, huh? I mean, if we are to go, let's just say hypothetically the bull market starts when Bitcoin halves sometime in the last week of April through to the end of September, something like that. I mean, I can't conceive the price getting up to $20,000 up there. These are quite steep channels, huh? But maybe, so you have like maybe there, let's say that's $87. This is $18 here. The lowest one is coming at $5.4 there. We continue to clone it. According to this, roughly we're coming to the channel, we are at the channel midpoint at the current price by the 15th of April. And if we continue, let's say let's just say we were to just continue in this channel, you know, you do get up to like the $5 target just staying within this one channel. We don't lose this midpoint now. Yeah, so I have to get back up to those previous channels, because that would I mean, we're on log, so it wouldn't, you know, I'm not foreseeing this bull run to go up that height, but even to get up to this, like this higher target of 4.9 from where we are, that's it's 156x, you see. And it is conceivable because it is within this kind of channel formation that's cloned from there, which does seem to react, but it We haven't actually found an upward channel yet. The only other thing that I was thinking of before was this. This is the other channel that I was imagining. I'll color it green actually. There to that low. It's like you take it to that low. On the first instance, let me take it to the all-time high. Maybe color it green. Right. Doesn't really match anywhere. But if you take it a bit lower, the angle's correct, that's the thing. Take it to this one. Take it to this. See how it matches. Yeah. I like this actually, look. Just look at the green one, not the red ones. Here it kind of holds. Here. Back tests there. Here it kind of holds until it doesn't, and then it back tests. And here it goes through, it back tests. And then here it's holding. How steep is that green one? It kind of corresponds here, look. The peak of the bull run. This lower, the higher part of the green channel would be about $4. Obviously you're assuming that you don't lose the lower green channel. Then the question is, when you get to this point, which is like June, if we're still at these like lower prices, we haven't impulsed yet, do you kind of find support to go up where there's a bit of cross, I don't know if I want to lose this like lower green channel, but it is very possible, it depending if how we impulse. Like you could impulse and get above these channels, it is possible, and then you can flip them into support to go higher. Then the price can fall down to a lower channel. It is possible to do that as well, it doesn't have to just follow one channel. Let me see if this green one, if I clone that, works. It would be better if it was lower, actually. Slightly lower. Yeah. I have to see how these channels play out, because I've got an idea of what I'm thinking, but who knows? Like no one really knows how this is going to play out. Just have to keep an eye on it. See which ones are respected the most, and the price will have a way of its figuring itself out. In terms of like volume ranges, as I was saying before, it's very clear that we're in certain like zones, and I do think this is a zone here, this whole top part. There's a zone. I think we peaked, I think we kind of came into it. This is like a range. It's like from the all-time high to this gate price, this launch price. And then I think from this black, that's fine. And then if you do the same thing, this launch price here to this all-time low, I think that's your next zone. Change the backgrounds to color. Let me see it. So I think these are your two ranges. And then what I was saying before is you can break these down. So if we're going to do a range pool, a volume pool, usually you do it from the way the candle enters. Let me put it on the daily. Yeah. So we are at the highest volume node of this lower range as well. You have kind of like high volume nodes which could be the separations of the ranges. You can see here clearly on this volume profile. So that's the kind of lower range volume profile, and then you have an upper range volume profile, again to the same place where the price left that range. You coincide it with what I had before, which is this see another one. Time frame level, see if there are any correspondences. Mm, 21 cents. I'm going to mark that out because I think that's quite important. This one. I'd like to see a bullish impulsive move right up to that level. Range. Previous range. Slightly above the value area high, actually. You'd probably go with the value area high, but it's good to have both of them. Right, let's see what we have now. We're starting to form some kind of idea of we have more ranges here, not just it's not just these two big ranges. These are two big ranges, but I think we have a key, like you can, if you look at this, tell me what you think. You know, this whole this part, it's like one range there, and you have this lower range here. Again, you have this like top part here, and then you have this lower part here, and actually we are in the top half here. So this is the first part, this is kind of the lower part here, and then now we're in this top part here. And it's like you could break it down into all these kind of mini ranges, squares basically, and actually here you can see that, like, so there's definitely a line here, and then there's a line there. So I don't know if you can see what I'm seeing, but what I'm seeing is that this whole lower part has three ranges, right? You do the same thing for this top part here as well. So probably this is quite messy, so it's kind of like there, and this bit here kind of, it's really messy, but kind of feels like that's one. To me that looks like one. And this is the kind of like the bigger one, the most expansive one, because it's like the, could that be one? I don't know, it's hard because it's like little volume, and then you have this big injection of volume, and then you have this kind of top part here which is just no volume whatsoever. You have kind of like these top ones are low volume in comparison to the lower ranges. These are more compressed, and usually what happens is that once you get into this lower volume ranges, the price becomes really volatile and it moves quite fast, up and down. And right now we're kind of really compressing in terms of the way the price is moving. That's what it looks like at the moment to me. Get rid of this stuff. So now we kind of can somehow see that we're in three ranges. We're in the top, we're above one range right now. I think we're above one range. That's like one whole range there. And we're in the top part of this one here, see? Which kind of corresponds to this here. The problem is because we've gone through many ranges, you can't like take volume data from, we can't join the volume data. So I would say that we're above a range right now, potentially. How do you draw it out? This is the candle that comes in. That's the candle that leaves. Back in it here. We kind of left it here. Properly left it here. And now we're, unless we just take it to that one. We really entered it there. Said there was one here as well. Yeah, look, so no, there to there. There was no volume there at all. Same thing. There to there. And this whole upper range to there. Okay, so that's quite interesting because when there's this upper range, didn't really see that before. I'm looking at it now. And this one is to here. The reason why it's taking time to draw these pulls is because I've put it on maximum rows, like what is it, 2,000 rows or something like that. I'm just trying to see if there's anyone chatting. Probably not. I do have someone watching. Look at 2 people watching. That's cool. Say hi if you're watching. There's a lot of volume here. Look, see that volume? There's a lot of volume up there. I've tried to do it as far as I can see the ranges, and we're not in this lower range anymore. This lower part, I feel like we're above it now. See this? We have 3 mini range profiles. Hi Majid, how's it going? I can see that you're watching me. I can see that there's 3 range profiles here, and we're no longer in this lower range. And what's happened is if you see that the value area high is rejected from that, as the price came down, it rejected from the value area high of this previous range. And this one, there's not much volume here, but it looks like to me roughly this value area high is here, is acting as support now for the range that we're in. See that? It looks like that's how, even though right now the value area low is lower, it looks like the price is sitting on top of a previous range value area high. And it also looks as though we have found acceptance into this mid-range. You see this whole value area, we found acceptance into this lower value area here. See that? It looks as though that's what's happened, and that, but it doesn't look like we've found acceptance into this range here. So we're kind of in between 2 previous ranges right now. We're in between we're in between the value area of this middle range, the value area low of this middle range, and the value area low of this this first range. That's the first range. When we entered this lower range, we came first into this one, and that was the second range. That was the second lower range that we entered into. So right now, the value area low of the second range is holding as resistance, and that's where this red line is. But we've cleared these all these ranges in the lows, and we have this higher range here now. We've got acceptance into the value area low of this higher range, and we're just trying to get ourselves into this range here. That's what I'm seeing right now. So we're still here. We haven't got acceptance into that range yet. And actually, even though I said before that I'm looking for this top candle to flip, I think the reality is that I'm not looking for this top candle to flip. I'm actually looking for this red line to flip as support. That's what I'm looking to do, because that would be our current value area high. And so it would make sense for that level to flip as support first. I'm not looking for that candle to flip as support. I'm looking for that value area to flip as into support first. Then once that flips into support, we've entered this the value area of this range here, and our next level of resistance is going to be, the biggest one is going to be this level here, which is at about 5 cents. 5 cents. It's here. See that? There. So I think that's going to be our next level of resistance on the way up. Once we get past the current level now, I think that's going to be the next level of resistance. And then if we flip that into support, get acceptance into this higher range, which is the first range that we entered when we came into this whole lower band, then obviously our next target is going to be up there at 9 cents. So our first higher level target is going to be about 5 cents, then it's going to be 9 cents. And I think the way the price moves, that's a good way of looking at it, of how the price moves. I think if you were to connect that with all the other stuff that I've done, this is all based on volume. If we correspond it with our higher time frame levels, do we get any kind of significant matches? Well, we've got levels a bit lower here at 4.5 cents, and on that higher time frame level of 9 cents, we have this monthly level, and obviously we have a very significant level here at this point of control here, which corresponds to some kind of key levels, a weekly and a 3 monthly. That's coming in at about 6. So we have levels to cross as we go up. It's very obvious we have levels to cross. Get rid of these. Oops. And of course, I think once we get into this upper range, I think it's going to be much easier to get through. I said there was like one, it's like a lower range here, basically somewhere like here. Yeah, the problem with these green candles is they're quite high volume. You almost have to take this whole first range on its own. Almost. You see how the price found resistance here. There is a reason why it found resistance, because look, it was coming into this this previous range in this value area where there was volume, and it tried to, you see how it tried to get into it, couldn't get into it, and then it was rejected, and then it just sold off. There was a reason why that happened. And so I think naturally what we want to happen in the future is we need this level to price to find acceptance into this level as well. That's going to be about 11.5 cents. And that's going to be really critical. So even though I've marked out 9 cents, it's very possible that the price kind of gets above 9 cents and just tries to get into that higher level before it manages to do that, just like what we're doing now, you know. This is all based on historical data. Obviously the key to us getting to higher levels is either long periods of consolidation or injection of volume, and I would prefer the volume right now, because we have some key liquidity levels to get through, and it's going to require volume to get us there. Like right now, I wouldn't mind if we could kind of, if it was possible to get up there and consolidate here rather than down here, you know. But I guess it's just, you know, we just have to see what happens. Right, let me just put these into a little group. Yeah, just, I don't know right now. See, I think these red lines are important that I've marked out, especially this one here, this like 4-5 cent level. Get above there, we have to get past this level now, where we are now here. Then we have to break this level here, and then this is the next level, I think, from a volume perspective. And that might be it. Once we get above there, then we might just go up really fast. So we still have a little bit of work to do. So yeah. That corresponds with that volume level that I drew just above it, that white line. One there. No, nothing. think when it comes to like the way the price moves, we are going to expect sometime in the future for the price to flip this weekly 50 moving average into support. That is kind of something that we will be expecting to do. And then in the context of a bull market, once we're above the average, I don't think no one is expecting the price to come back underneath the average. And the average will slowly turn depending on how far up the price goes, pulls up the average. That's what you're expecting. So this is the first, what I've noticed with like the 50 moving average is that when the price comes above it on this kind of strong downtrend, when it kind of rubbers back down, if it can't really push past the previous low, like it hasn't, then the momentum and the strength of that average is gone. It loses its momentum. And so so right now what we're experiencing is a shift in momentum. And you have that same kind of situation here. You see here, you see it went up, but it did go down. And so next time it hit, it continued, you see, because it went lower. It went up and it went lower. So next time it hit, it continued. This has turned it, and now it hasn't really gone lower. So we've kind of turned it now on the 3-day chart. See that? And that's the first time we've hit the 200 on the 3-day chart. So that's a good sign, actually. That's not a bad sign. The fact that we've hit it once, you know, hit it twice, and 3 times a lady, you know. Look like that. Sometimes looking at it in reverse, you'll see different things. Yeah, based on candle structure, I think, you know, once you get like a weekly close underneath this level, somehow, once you basically flip this level, then the whole structure changes, because there isn't really much structure here to kind of hold the price. It will probably kind of slip really fast. I think the hardest work now for this token is getting like some closes here underneath this level. That's what we want. I think based on like candle formations and structure, that's like critical right now, just to change this whole pattern. And then you have to, from a candle perspective, you have to flip that somehow into support, something like that. That's what needs to happen, and then you'll get continuation. It's more important to flip this than anything else right now, because then this whole thing becomes support. You know, it's a lot easier to see in reverse, because would you buy the price? Would you buy it now? Would you buy? Yeah, someone has. Would you sell? This looks like it's a red weaker. We have 3 greens, 1 red. It's looking like a red week. You see this 3-day chart. We're still making higher lows. Get rid of the red ones. I like the green one. Put the red ones back. This is definitely the correct angle. That's what I'm seeing. This green channel that I've created, the angle is correct. Does it tell you the angle? No. That's to the all-time high. Let me do that properly. This is the all-time high to the all-time low. Look at the weekly chart. Look, on the weekly chart, it looks good. On the weekly chart. For some reason, the weekly chart looks really good. I think, like, it makes sense because of the low liquidity. Oh, David, wow, long stream. I'm doing an in-depth analysis on TRVL. I've just deleted all my drawings and I've just redone them on Gate. So I haven't really done this on the stream, so I just wanted to do it. If anyone's interested, they can get a real in-depth analysis on TRVL. But I wanted to do it on Gate. I didn't want to do it on Max because for some reason Gate is slightly different. Yeah, it's pretty longer. But I'm only doing what I would normally do, except now I'm just streaming it. It's no big difference, right? So I kind of like this on the weekly chart. See, it kind of did work there in the midpoint. That's the all-time high. This is the low. This is the correct angle. I think this is the correct angle. This is the bull market. Can we get to $200? If not, then we're looking at the midpoint, which is here. Can we get to the midpoint by the end of the bull market, which is here? If you chuck in your fib time, where's my fib time? That's my fib time. I've removed the wrong one. Where's my fib time? There it is. That's my fib time. I think this angle is right. I would love for us to get to $1 by March, to hit that midpoint. Or by November, we're looking at according to this, $2.3. Or by the 21st of April, $4. And then this is over, this is past the bull market. So somewhere September, we're looking at $6. This is, I think this is the most interesting channel, and with when you connect it with fib time, it does give you, it does paint a picture of potential areas of target. And then if I'm adding my extension, which one was it? What's that fib retracement? Where's my other one? That's my trend based fib retracement. If I change that to my extension, looking at the weekly time frame now, so honestly my highest time target was 23, right? It's the 1.618. But to get to 23, you have to cross this midpoint. I think this midpoint is going to play a role. So you'd have to be looking, if the market peaks at around September 25 or October, you're like here. You're in this zone here. Basically, you're basically in this zone. You're pushing up. I think in order to get to the higher target of that blue line, somehow when the price gets above up there, it's going to have to flip that into support to push up like that. I think that's what would happen. In my mind, that's the correct kind of behavior at those highest levels, because you're already overextended. You know, you're really overextended already when you get to this midpoint at that time. You're looking at $240x, about $6 to $7. Yeah, I am expecting us to get up to this like 1.272, between this 1.272 and this 1.414. I am expecting us to get there. And when I look at this channel that I've created from these two lows to the all-time high, the angle looks good. The angle looks good, and the midpoint will put us in that region, in that zone, at the right time, which is September. Yeah, see, so right here it puts us in the correct area. And the 1.272, I mean, according to this, we're looking at the 23rd of June. That would be the extent. That would be really good confluence, you know, get up there. Midpoint of the channel, you're at a major fib. Our fib time is later or before. So if you want to mark it out as before, earlier, then that's like $3.4. $3.4. And obviously if you go over this 1.618 fib time, you're looking at $2.3 any one of these targets on fib time would be really good, you know, so you could take any one of them. And this, the best case scenario, the most bullish of the bulls within this channel is obviously going to be this one here, but that's way in December at 9.6, but that's going to be after Bitcoin peaks. 9.6, but that would be crazy confluence. You'd have a lot of confluence there for the price to turn. To get to these higher targets, I really think we're going to need an exchange launch to get to 23 up in those highs, and it would have to be, yeah, it would have to be when Bitcoin is already pumping, you know, and a lot of this has got to do with Bitcoin, but I think 1.618 is possible. If you could do that, you could do something like that, maybe like that, I don't know. Flip this mid channel into support, then flip these levels and then push up. And I think when you get to that level, it's going to be, a lot of people will sell. They're not going to aim for higher. You know, they might. They may not get there. Just to get to this midpoint, it's not difficult. Although it's not difficult, even in the current, at our current range, if you look at our current range, it's already a 26x, 26x, 23, 24, 26, just to get to this midpoint. I think this midpoint is gonna, I'm gonna be tracking this midpoint because I do like it. I like the way the price has, on the weekly time frame, it's moved here off it. This didn't get to it. Probably could have, but it didn't, and that makes sense because a lot of people were trapped and they were just trying to exit. Hold on. Once you get into these higher levels, I mean, if you can, I mean, this looks like a mess to you or to anyone looking at this, but it's very obvious that once you clear, like once you get past here, there's not much resistance, you see? Most of the resistance is lower down. That's why you need volume to get through that resistance. But once you get into the higher levels, there isn't much resistance, and that's why when you get to the higher levels, the price can actually move up quite far, and very quickly. So I've literally marked out all of the levels. Mm. Yeah, we do have to get past these GANs though. But I don't think the GANs are going to be a problem. It's just really telling you about the speed. The speed of descent is decreasing, you know. Faster, slower, 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 and then it will shoot up. You know, like that's what these GANs are showing, you see. So it goes fast and it slows down. And it slows down. You know, that's what this is. So I wouldn't you don't really like they're not telling us anything bad. They are saying that there are levels of kind of natural resistance which is affecting the price. But what I'm getting from this is the speed is reducing, and the speed of descent is reducing. You know, so it's very possible that the price behaves that way. No longer is it going to kind of take a long time to pass. You know, it is possible to do for that for the price, and we might see that we might see a real impulsive move like this. It is possible. Like I can't predict the future, but I do think that this bottom green line, this channel line, has to be held at all costs. Now that we've kind of formulated it, and I think the next, like if I was gonna trade this as a trader, I'm not trading this. I'm accumulating this, but as a trader, you want to kind of just catch the price when I mean at the where we currently are, that's your trade plan, you know, like you don't want to lose that channel. And maybe you could put a stop down here, but I think that's your invalidation is this low. You don't really want to see the price come down here, because I've lost this line. It becomes resistance again. I think if that was to happen, it wouldn't look good. It would be wrong. I think if this was to come down, then you're out of the trade. You know, like you'd want to reclaim. I'd want the price to reclaim that level first before I took the trade again. I wouldn't mind coming in higher, but that would need to happen for me to take the trade, yeah, as a trader. And then my target would be easily this midpoint of this channel that I've just created, and then the all-time high, and then obviously you'd be targeting the top of the channel. You know, that's how traders behave. But they would be taking profit at these key levels, and I think the first key level would be like it'd be like there. It'd be like the 61618 extension on this trend base, this fib extension, you know, that, and it would line up with, maybe it would line up with yeah, maybe that's a bit overextended. Maybe you would actually just target there. That's, as a trader, that's how you would trade this. But I think currently right now a trader could take this, but their invalidation, I think their hard invalidation would be here. But I think as soon as the price, you start losing this lower this lower line, you would mentally, it would invalidate the trade, because I don't think you want the price to lose this line. I don't think that would be the right, it wouldn't look good. You know, why are you losing trend lines in a bull market? It's a sign of weakness. It's not a sign of strength to lose a trend line in a bull market. It's a sign, and you need to claim lines, not lose lines. So as a trader, I would be like, that's not what I'm looking for. I'm looking for, you know, the price to react off that line the next time it hit, wherever it hits. Either it hits, I mean, we're only talking about mid-February, but the thing is, you know, if the price doesn't go down and it starts going up, are you gonna, if you wait for it to hit the line, you have to accept higher prices. Whereas now you have a perfectly good trade, as long as it's you position yourself correctly. You're talking about a risk to reward ratio of 28. Yeah, you risk 1 for 28. That's what this trade is. That's this trade is a 1 to 28 trade. Just this one, just taking it back up to the golden pocket, based on an invalidation underneath this this pivot here, and you form this lower trend line, which you don't expect to break. You don't expect the price to come under. You expect it, at the very least, you'd expect it, if it does come down to test, to go back up. Yeah, that's what you're expecting. And so you could start taking the trade now, or you could wait. And if you waited, you're waiting for a reaction. Once you get the reaction, then your invalidation becomes much smaller. Once you get a reaction, if you get a reaction like that, you can enter the trades at this exactly the same place, but you have a much smaller invalidation. And then you're looking at a risk to reward of taking it back up to the extension of the 618. You're looking at a risk to reward of 1.1 to 73. So you risk $1,000 and you make $73,000. That's what this trade is. Yeah, you risk that much. So basically, what does that mean? That means you buy enough of this token so that if you get invalidated, you lose $1,000. So the move from here to here would be 1,000 loss. Yeah. But then the move from here to here would be $74,000. So it's worth taking that trade. It's a low risk trade. And obviously you could, you know, like you could trade it and take profit along the way. So you're taking out your initial equity, so it becomes a risks-free trade, and that would probably be the smart play. But there are levels here. You could wait for this daily level to be back tested. Like, I mean, there's no reason why we should lose. There's no reason why. I mean, there's two ways to play this, I think, as a trader. I think you either enter on another test of this line here, and then that would be your invalidation. You have a much smaller invalidation, you know. Or you could just wait for the first sign of like strength. The first sign of strength would be, based on what I'm looking at this now, is a weekly close above that weekly level, anywhere up there. And then if you took that trade like that, you're not expecting the price to close back underneath that weekly level, because look how many weeks we've been hitting into that weekly level. 1, 2, 3, 4, 5, 6, 7 weeks at that level, and the price has been rejected. So obviously, if the price is able to close above that weekly level, you could take the trade, and your invalidation is closing back underneath that. You don't expect that. You could just have a small invalidation, just just underneath any one of these candles. For the price to do that, that would be strength. To do that, the price to close above that weekly level, which is obviously acting as resistance, would be strength. Yeah, so you have a really small invalidation, you have exactly the same target, back up, trade it all the way back up to the 618 of the higher time frame. Yeah, and you're looking at potentially a higher entry, like a potentially, I don't know how high you would enter, but you're basically entering on strength, and you're looking at 1 to 95 trade. So you'd risk $1,000 on this trade, and you make $95,000 on this one trade just by entering on the sign of strength. So there's two ways to do it. You either enter on the sign of strength, which is a weekly, you start getting some closes above this weekly level, which I've marked out, and then that's when you enter. You're not, because of the illiquid nature of this token, it'd be very hard to get a really large position, but you can, it's possible, but you'd probably be looking at an average position slightly higher, and I don't know how high, but then your risk to reward ratio comes down. So that's why building a position now and having a lower invalidation would also work too. There's two types of trade there. Yeah, two types of trade. And you could have a key take profit. I mean, you'd have to evaluate that yourself, but I think you have to see how the price moves and how the volume comes in. But a key take profit could be here. You could take a key take profit, could be there, it could be anywhere here, it could be this previous high. I mean, this makes sense. This weekly level and this 3-month level would make sense, but I think it's probably with this kind of trade, because you're catching in the lows and because you're looking to coming off this lower trend line in the context of a bull market, you want this trade to run as long as possible, and I think your key take profit is going to be that 618 area, that higher level, that there. And then it would be easy, because to re-enter, if you're looking to re-enter, then you could just wait for the price, depending on how it behaves. You could wait for the price to come back in. I don't know how it's going to act, but you to re-enter, you'd look for the price to find support. Maybe it finds support here, and then you could have another trade to trade the next wave up, because that's what you're effectively trying to do. You're trying to catch 3 waves of this price, of this token. We're not even in wave 1 yet. Yeah, the reason why this, and that people may ask, and they might go, why, well, isn't this wave 1? Wasn't this the wave 1? And actually the answer is easily no. Yeah, and I can explain why. Because if this was wave 1, if this was the wave 1, yeah, from here to here, then making a new low, which we have, invalidates the wave count, invalidates the count. The count has to reset back to 0. So it could have been a wave 1. This could have been a wave 1, because it's very impulsive. It's impulsive enough to be a wave 1, but then this 2 had to be higher than this 0. Yeah, and then that would have been your wave 1, right? And because we've made a new low here, the wave count is reset, and so now we haven't actually formed a wave 1 yet. on this token. That's what we're looking for now. So that's why this is so bullish, because we're potentially at the zero of a 5-wave Elliott wave count, and that will be the zero of the wave higher time frame wave 1, which could extend for many years, multiple years. We're basically at the beginning of the count, and it's even more bullish now because this wave count has been invalidated. This is not the wave 1. This is, you're not entering on a wave 3 now, and the people, this is why people don't understand this. So you're actually right now, you're looking to enter this token on a 0. This is your 0 right now. Okay, it's not 0 here. Wherever the impulsiveness begins, like this isn't 0 yet, because I'm waiting for the impulse to begin. It hasn't begun yet. Yeah. Anytime the impulse begins, that's your 0, right? That's your wave 1. I don't know how far this is going to get. Honestly, I can't predict. You can't predict anything. Who knows? But let's say that's your wave 2. Let's get up there. Let's get up to wave 3. 4. 5. I mean, it's possible. This is all possible. Something like that is possible. Or if you see, the thing about the wave 3 is, what if you overextend and you push right up? Who knows how far the wave, the 3 is the most bullish one, and the higher you go, the less volume resistance there is, and the more bullish and the more greedy people become. Yeah, and that's what I'm considering. That's what I'm considering. I'm considering greed. I'm considering volume and lack of volume and lack of levels. And I'm considering FOMO. And then I'm considering Bitcoin. I'm considering hype. I'm considering news and bullish news and networks and partnerships and all that kind of stuff. Yeah, and that's all going to happen in the latter stages of the market, the bull market. Yeah, that's where the real kind of hysteria is going to kick in, where people are going to be FOMOing in, and they're going to be looking at this token at $1.50 and going, wow, $1.50, that's cheap. Yeah, they'll be looking at Bitcoin, and who knows how far Bitcoin might be by then. It might be 100,000, it might be 80,000, or it might be more, who knows. But then they'll be saying, well, I can buy Bitcoin for this amount, or I can buy this token for $1. I'll buy this token. That's how people think. And so in that context, like right now, because we haven't started the wave 1, this is the trade. Look, you've created this lower trend line. It matches quite nicely midpoint with the all-time high. Yeah. I don't necessarily think I want to see this trend line lost. I've done all of the levels, and I've shown you that there's a lot of untapped levels underneath us, liquidity levels, right? I've done the volume pools, and I've shown you that we are above these lower volume levels. We are above them. I've shown you that. So we're above these volume levels. So we're in the middle stage of the lower range at the moment. So if you have the range, get rid of this. I've shown you that this is the lower range, and this is the next range. We're in the middle range of the lower range. I've shown you that. So we're on support now, as far as I'm concerned. This is why this looks, for me, this looks like a very attractive trade. Now, the problem, as everyone is always asking, is, well, this is very illiquid. How do I enter? How do I take an entry? Well, the best way to enter is to scale in before the impulsiveness begins. But if it starts to become impulsive, there's no other way but to mark it in and push the impulse. But then you're getting a much higher entry, and so this risk, the risk to reward changes the higher your average entry becomes, and eventually it could be like 1 to 11 instead of where it is now at 1 to, with a wider invalidation, it's right now it's about 1 to 30 or 1 to 29.5 or whatever. I think 1 to 30 is correct. But then the point is that I'm not expecting the price to fall back in the context of the bull market. I don't expect the price to fall back into a lower range. That would be weird. It doesn't make any sense. We've clearly rejected from this lower range on 3 occasions. You know, we've clearly rejected, and and what I can see here on the weekly time frame is this candle pattern here is a bullish reversal. You have 2 red candles, you have a Morningstar doji, you have 2 green candles. It closed higher than this previous weekly level. We're in a the candle pattern is a bullish reversal. This is not an illiquid environment because I'm looking at the weekly time frame. So the candles are relevant. Yeah, I'm not looking at the lower time frames. I'm looking at the higher time frames. Even though it is an illiquid environment, these candles represent, relatively speaking, quite high volume. That's 11 million, that's 7 million. That Morningstar doji was almost 9 million. Yeah, this consolidation that we're experiencing now is 6 million, 10 million, 6 million, 5 million. It's not low volume in comparison to the candles that are being formed. Yeah, so I think this is the good trade, and I think we are looking to make a 1 wave, and my target for the 1 wave is this 618. My target is 29 cents. I would like to see it to get there, and then if we have a pullback, who knows? Like, I mean, you can get deep corrections. Like, the thing about the wave 2 is that the wave 2 just mustn't come underneath the 0. But in the context of the bull market, I wouldn't want to see the wave 2 come below this trend line. And I think also once we get above 9 cents, I don't really want to see it get back below 9 cents again, simply because I'm marking that out as being the higher range. So I think once we're in that upper range, I don't necessarily think it would be nice just to come back into the lower range. That's my thoughts. So I think at the very worst case scenario, we have a correction back to 9 cents. Then if I was to draw some kind of fib from where we are now to that, it's above the golden pocket, you see. So that would be the 50. It comes down there, it would be the 50, not the golden pocket. So I mean, I can't predict what can happen in the future, and actually looking at this, maybe the 382 would be better, because that would be an SR flip of this level here. See that? So actually, maybe I'm thinking from a more bullish perspective, maybe we have a 2 correction to come back to backtest this high here. See that? And we just retrace, because this is going to be a bullish impulse. We retrace down to about 13 cents, 12 cents. We go all the way up to 30 cents, come back into 13 cents. And that would be like a good place for the bulls to defend. If they took profit at the retrace at the pullback on the wave 1, that would be the wave 2. I can't predict how long this is going to take, whether it comes down fast or how it comes down. Does it zigzag down like this? I can't predict that. And also, you know, I can't predict if this goes flat. Maybe this corrects flat. I don't know. But this is what I would like to see. And then once you have that kind of, to see where the 2 lands, then you can create a trend base extension for the wave 3. Excuse me. And that would actually line up with the TR pocket on the fib extension to come up all the way up to that mid channel on the wave 3. And then you'd be looking to trade the wave 2 all the way up to the 3. And my target for the 3 then potentially, I don't know when it could happen, probably kind of March, April, March by next year. We're looking probably at about like $3, $4, maybe taking out this gate high. And then you retrace again, possibly to the all-time high, something like that, for a final push. Now the final push can be just back up to the same high. It could be higher, who knows. No one can predict the 5. As long as the 3 is longer than the 1, then the 5 can be whatever. It could be short, it could be extremely long. Yeah. Now, if the 3 overextends, yeah, if the 3 overextends, then the 5 could look different, because it could come back. It could come back to this midpoint here and hit our higher target, you know. So really the 5 is going to depend on the 3. The 3 is going to determine the 5. That's what I'm saying. How, like, if the 3 only manages to get to there, then I don't know if I'm going to be expecting the 5 to push up to 20, to the higher targets. You know, maybe I'll be expecting it to maybe push up again to like slightly higher, or just to the same height, and that's it. Yeah. But if I see that the 3 is really crazy, it's like a crazy 3, then naturally I would expect the 5 to possibly push up to the higher target, you know. So I think the 3 is going to be really important, and I think the 1 is going to be important too. So and then you're creating those based on the 0 to the 1 to the 2. That's how I'm doing the trend based fib extension to create those targets. So obviously if the 2 corrects flat, or if the 2 corrects deep, it's going to have an impact on the targets that you're expecting, you know. And that's what I'm trying to, that's how you come up with your target. So obviously if the 1 goes all the way to the mid channel, and then the 2 is a flat correction, then you're going to have higher targets. If you have a deeper correction, then you're going to have lower targets, and that's how it works. So a large portion of what happens in the future is going to depend on this first wave and the 2 correction. The first wave and the 2 correction. Once we have that locked in, then we'll be able to come up with some really nice wave 3 targets. And obviously I'm hoping that we have a really nice wave 1 and a flat 2. I think that's going to be the best case scenario, if we have a nice wave 1 and a flat 2. Now I think it's very possible that we do go up to this golden pocket in the wave 1, because we've had such a deep and long correction, and come back to hold this previous high as support in the higher range that I've drawn out, this higher range. And I'm not expecting us to go back into the lower range once we're in this higher range, you know. And I would expect an impulsive move to take us out of this lower range. We're already in the middle part of the lower range, yeah. So we're almost Oh, we're halfway there almost. We're at the lower part, but we're in the middle part of the lower range. And the thing about the higher range, the top part of the higher range, so basically anything above that point, this top part, is there's literally no volume there. So with a little bit of momentum or a little bit of hype or a bit of a hysteria, you'd be surprised. The price will just go up very fast, very quickly. Yeah. And the key to us achieving those higher prices is that we get a large amount of volume on the way up. On the way up, it's really important that we can push up with good volume. So we have to see how the volume comes in and how the volume plays out. But we are seeing a little bit of increase in volume here, very slight, but we're not seeing this kind of volume yet. And that's the kind of volume that we want to start seeing. We're going to see push up with volume. Yeah, consolidate with decreasing volume, another push up with increasing volume. That's what we want to see. Right. So I think I've got a nice trade plan for anyone who's interested. Anyway, if you have any comments and if you have any other ideas, let me know. I've also done a Wyckoff accumulation pattern, so I'll be looking to see how that pans out. But I wanted to do something different on this gate profile to see if I could come up with anything new. And I think I've got a better idea of what I'm looking for now. But we'll just have to see how the volume comes in and how the price behaves. And it's very clear for everyone who's interested. It's very clear that we are now at a really good place because we have that one. We have we're basically underneath this red line and we're above, so that blue line, where is that blue line? Above this blue line, basically in between. We're trapped at the moment between this weekly and this we're here. And all we have to do now is just to flip this weekly into support. And I think we're just going to expand like crazy. There's going to be a big expansion once we flip that into support. That's what it looks like to me. And the more that we keep on pushing against this level, or you see how many times we've pushed against this weekly level, the more times that we push against this level, the weaker it's going to get. And it's getting weak. You know, you can't see it. We're making higher lows and it's getting weak, you know, and eventually it will break. And we have a crap load of liquidity underneath us. I wouldn't be surprised. I mean, like, I know I said the invalidation is lower down here. And the reason why I say I would put the invalidation down here is because you have to get through all of these, like 1, 2, 3, 4, 5, 6, 7 untapped levels of liquidity. Yeah. But I wouldn't necessarily, like, I wouldn't, as a trader, if you do go down here, you probably want to enter when you reclaim that level, or you wait for a reversal pattern and then you have a smaller invalidation, higher risk to reward ratio, you know. But then you do have to get back above that level. But that's the other possibility. But I don't think we're going to get back down there now, but we'll see. I think it's very unlikely, but let's see. And the longer we are at these levels, the more unlikely it's going to be to go down. And that's the other thing. The longer we are at this level now. And put that into my, do I have an Elliott wave? No. something like that. I mean, alternatively, you're looking to make a head and shoulders like that. Alternatively, something like that. I think that would look okay as well. You have an expansive 3, and the 3 could be quite bullish, and then obviously you have a nice back into there, and then you have a 5, but that'll be quite a deep correction going all the way up to 3, back down to 5 cents, but then you have another push up. I don't like it, but I mean, it's also possible, you know. And then I think once you form some kind of like inverse head and shoulders like this in the context of a bull market, look how that's like a 2-year head and shoulders pattern formed. I would expect a crazy expansion. I wouldn't just expect a kind of a weak expansion. I would expect a real crazy expansion, like a really mad expansion. You know, that's what I would be expecting, because that's a really long-term bullish reversal pattern that breaks out. You know, that's how would that would be from April 22 all the way to October 24. If that was to form, that would be incredibly bullish. So I wouldn't expect like a weak explosion, but alternatively, when you're looking at patterns as well, this could form as well, like a double bottom, you know, with like a big wave 1 and maybe a smaller wave 3 and then a smaller wave 5. I mean, that's also possible as well, something like that. And you're looking at more of a double bottom, like a W, like that. I don't know, there's so many ways that this can form, but ultimately this is the trade. The trade is the same. Trade it all the way up to the golden pocket. I hope that's been informative, and I think I've been streaming for a long time. It's already dark outside, so right. See ya. Gotta stop this now.